Well, hello everybody, Bill Moore here. We are going to continue looking for low-risk trades in the components of the sector ETFs. Our 11 baskets have already been run, as we've been doing, using 0.8 correlation and 0.8 RW coefficient, and looking for things that are 1.25 standard deviations away from their norm. Then after all that, I went ahead and ran a number of winners greater than 6, and this is what I popped up with. I thought it'd be interesting just to take a look at that, and it is also interesting that we have a few of these trades on already. But there were a couple of ones that I thought were something to look at today. Each one of them is a little bit unique, and both of them are in baskets that are historically not fast moving. In other words, steady performers, but not big dollar performers. But this is the one I think that I liked the best. Let's take a look at it. It's a couple of utilities, and you can see here that it's got a very strong sine wave type motion. I like that, right? So it had a slightly, a slight downdrift, but not much, particularly lately. And then the back test, it's been outside the second standard deviation 7 times. It has profitably returned to the mean 6 times. So let's go take a look and see what happened out here. And the loser was back in 2016, right? So almost 2.5 years ago. So for 2.5 years, it has been very well behaved. The picture looks good. I've already added it to the observe page, but let's go take a closer look at it. And you see that's a really, really good picture. Now, if we take a look over in this end for a minute here, we can see that it's only 1.5 standard deviations up. Okay, so it's not to the 2 is where we've been, normally been putting things on, and the last move was a strong move up. So the trend is also up. So I'm going to suggest, if we do decide to make this the recommendation, that we keep a close eye on it. I think we're going to get a better price than what we see here. Okay, so I'm going to record it right now because that's how I keep up with making sure we have edge on the recommendations. But if I'm a trader, as I hope most of you guys are, I'm going to suggest that you watch this and try to get a better price than what you're looking at here. Let's go ahead and take a look at the hitting probabilities. So yeah, I've already queued this up here, and we see a good, it's clearly a mean reversion, but look how tight these numbers are, right? And we see that a lot in the utilities. So we run the simulation 30 days back, the target price minus 3.16. We're only at 1.78 basically right now. Now, notice that it's a short, right? So it's only saying that we're going to be below the current price in 30 days, 82.5% of the time. And I say only. That's 82.5%. That's a nice number as far as suggesting that we're going to have a good percentage of not having a loser in 30 days. But we've seen better numbers, right? We've seen better numbers than that. And let's just toss in here for example. Let's put the target price in here and see. It's saying we're only going to be at the target price, 22% of the time in 30 days. And up here it's saying half the time only in 64 days. So that's indicative of a slow moving, very steady pair here. I think probably if we're getting into this, we might want to think about holding it for 60 or 90 days. Let's take a quick look at 60. We're still, at a good number here, a slightly better number at that point. And here, let's take a look at what this says. Yeah, so then we're about halfway, half the time getting there, which is basically what this is saying as well. So I think I'm going to make this the recommendation. It's an interesting one. I think it's a very safe one, and I think we're going to have to plan to hold this one for probably longer than 30 days, but perhaps closer to 60. But let's make this the recommendation of the day. So the recommendation is PNW minus 3.078 of CNP. It is a short, so for every share of PNW that you sell, you're going to buy 3.078 shares of CNP. Good luck with your trading.